If you want me to start, just tell me go. Good evening, students. My name is, and the topic we are looking at is partnership accounts. We'll be beginning with some past questions in UTME. As a university tertiary matriculation examination. We have some. Our choice for this topic, partnership account, is major. You can imagine out of 40 questions, you have about 10 to 12 questions on partnership accounts, which is about 1/4 or 25% of the entire questions on the subject accounting. So if you are able to master this topic, I believe you are on your way to scoring a higher mark. We'll look at the question. Question 1, there are some information provided to answer both question 1 and question 2. So use the information below to answer question 1 and 2. Use the information below to answer question 1 and 2. Ada and Udo are lawyers who went into partnership as Ado and Co. Ada brought in cash of 12,000 naira, furniture worth 18,000 naira, and a motor vehicle valued at 70,000 naira. Udo, on the other hand, brought in cash of 10,000 naira, his building valued at 10,500 naira, and a personal computer worth 35,000 naira. Now, question 1 says, what is the capital of Ado and Co? What is the capital of Ado and Co? Ado and Co. That is the name of the partnership. The correct answer, and in solving this kind of question, you look at what each partner contributed to the business. Capital can be seen as an asset. Cash is an asset, furniture is an asset, motor vehicle is an asset. You have for Udo also cash, an asset, building, an asset, personal computer too is an asset. So all you just need to do under UTME examination is to sum up the total. Some of us may not need calculator. 12 plus 18, that is 30,000. Plus 70,000, that is 100,000 for Ada. For Udo, you have 10,000 plus 10,000, 500, that's 20,500. Sorry, I notice the topographical error here. This 10,000 naira is 100,000 naira. 100,000 naira plus 10,500 naira, that is 110,500 naira plus 35,000 naira. That is 150,000 naira for Udo. Remember, Ada is 100,000. 100,000 plus 150,000. You have your answer C, 250,000 naira as their total capital. they contributed into the business. Then for question 2, using the same information, you say, what is the profit sharing ratio if it is based on capital contributed by Ada and Udo? If it is based on the capital contributed by Ada and Udo, what is the profit sharing ratio? Now, already we know that Ada contributes Ada contributes 100,000, which you can take as 100K. Udo contributed 150K. Now we are looking at the ratio. That's ratio 100 to 150. Ratio 100,000 to 150. The total, remember, is 250,000. That's the total. 250,000. 100,000 contributed over the total capital, which is 250. And when you are dealing with ratios, you are talking about percentage times 100%. So now you have 10 over 25. That is 2. Then 1 for Udo, you have 3. So the correct answer is ratio 2 to 3. B. The correct answer for number 2 is B, ratio 2 to 3. Because Ada contributed 100,000, while Udo contributed 150,000. Then number 3, he said, one major advantage of a ledger is that it's dash. A, he said it's a book of original entry. I will say no. It's only accessible to shareholders during liquidation. No. C, can be used by any type of business. That is very correct. D, removes the need for preparing balance sheet after each transaction. That's not true. The correct answer is C. Ledger can be used by any type of business. Number 5. Number 5, the total of creditors at the beginning of the year was 4,600. You notice number 4 is not there. What I did was to pick the question according to the numbering in the examination. The total of creditors at the beginning of the year was 4,600, and at the end of the year, 5,250. During the year, 26,500 was paid to the suppliers, and 130 was received in discounts from these suppliers. The purchases for the year would be, how do you determine the purchases for the year? So during the year, purchase 26,500. Then we say, and 130 naira was received in discount from these suppliers. So that means in all, you have 26,500 plus 130 naira. That gives us 26,630 naira. If you are used to calculator, you can use your calculator, but most times I like using the calculator brain. 26,630. That's answer B. This is number 6. Question number 6. You say given capital at the beginning, that is capital brought forward 20,000 naira, drawings later introduced within the period 8,000 naira. You say calculate the value of the profit for the period. What is the value of the profit for the period? Two items are most relevant. Two items are most relevant. You have the drawings for 3,000. Then you have the new capital introduced 8,000. When you take 3,000 from 8,000, you have 5,000. Your answer is C. At this point, I would like to review to us that in solving accounting problems, some of the details given may not be useful in answering a particular question. Some of the details given may not be useful. So they just want to test your knowledge if you know exactly what to do. So they can give you a lot of figures, whereas just few of them are relevant to the question. Bank account 59,410, capital account 50,000, purchases account 20,000. Take that again. Given bank account 59,000, capital account 50,000, purchases account 20,000, rent 90,000, rent is 2,500, then stationery 90 naira, typewriter 6,500, then sales 38,500. Then he said, in preparing a trial balance from the list of balances given above, what is the total in debit and the total in credit? Total in debit, take note, 38,500. These two items are to be credited. These two accounts are to be credited. So when you have 50,000 plus 38,500, that will give us 88,500. So you write it somewhere as your credit, 88,500. Then you go to the debit side. You have your bank account. At this point, let me use calculator. You have 59,410 naira plus. We have taken care of capital account. purchase account 20,000 plus rent 2,500 plus stationery 90 plus typewriter 6,500 plus, that's all. You have 88,500 naira also on the debit side. Remember, we also have 88,500 naira on the credit side. So that means the answer to the question is 88,500. That's option A. Option A as question number 7. We'll proceed to question number 8. Question number 8. It says the purchase of 2 generators by Hassan Electronics Enterprises should be recorded as A part of capital in the capital account. That's no. B, an acquisition of stock. No. C, an expense in its general office expense account. No. D, an acquisition of fixed assets. Yes. So D is the answer, because generator is a fixed asset. So it's an acquisition of fixed assets. That's D. Question number 9. You say appropriation account. You are given this information: interest on capital. For Kudu, you have 750. For Wale, you have 550. For their salaries, Kudu, you have 800 naira. Wale, you have 600 naira. Share of profits, Kudu 3,300. Wale 3,300. Determine the net profits of the partnership. Determine the net profits. Do a summation. Interest on capital, it's either you do it vertical or horizontal. You can decide to calculate for Kudu first. 750 plus 800, 3,300. That will give us 4,850. 4,850, you write it somewhere for Kudu, plus you have Wale 550 plus 600. That will give us 1,150 plus 3,350. That will give us 4,450 plus 4,450. That gives us a total of 9,300. 9,300. So answer option C is our answer to question 9. 9,300. 10. Dele and Sheung, who are in partnership, have decided to convert their business into a limited liability company where both become directors. Where both of them becomes directors. That is another company, limited liability company, from partnership. Now, the question is revealing to us that if you have been in partnership, you can decide to change into limited liability company. But in this kind of situation, it says to convert dash A, they will simply continue since there are no new members. They will simply continue since there are no new members. B, the partnership is formally ended and new company books opened. C, computation of goodwill must be done as it is legally required. E, this is typographical error. That's from JAMB. The shares and all other items will be shared equally and not in their former ratios. Look at the question critically. Dele and Sheung being in partnership. Now, they decide to convert the business into limited liability company. It is very simple. What happened is the partnership will formally be ended. That's option B. Then another thing that will happen, a new books of accounts will be opened for the new company. So option B is the answer. The partnership has to be ended by way of dissolution. You dissolve it, then a new business has been formed. It's another question on partnership. It said the major distinguishing element between the final account of a partnership and a sole trader is dash. The major distinguishing element between the final account of a partnership and a sole trader, these are two different businesses, is dash. Drawing, no. Creditors accounts, okay. C, appropriation account, no. D, capital account. The right answer is B, creditors account. Creditors account. That is the distinguishing element. Another question. You say goodwill appears in the books of a business only if it has been A, raised in connection with the admission of a new partner. B, purchased at a certain price if it has been raised. C, raised to account for the true value of a business on the death of a partner. D, raised in order to prevent the balance sheet showing that the business is insolvent. Goodwill appears in the books of a business purchased at a certain price if it has been raised. C, raised to account for the true value of a business on the death of a partner. Raised in order to prevent the balance sheet showing that the business is insolvent. The answer is A. Because goodwill is always determined at the point of admitting a new partner. So the answer is A. Then number 3, it said a payment of cash of 20 naira to John was entered on the receipt side of the cash book. The receipt side of the cash book, meaning that is the debit side of the cash book, instead of the credit side in error to John's account. So that transaction ought to have been recorded on the credit side, but it was recorded in error on the debit side to John's account. Now, the question, which of the following journal entries can be used to correct the error? Assuming John is a partner in a partnership business, which of the following journal entries can be used to correct the error? Now, take a look at the question. The amount involved is 20 naira. The person involved is John's account. So if John was debited, sorry, if it was entered the receipt side of the cash book, which is the debit side, but credited to John, that means, what that means is that John will have to be debited because he was credited in error, credited to John's account. If John was credited with the same amount, then in correcting it, John has to be debited with the same amount, while cash has to be credited. So option D is the answer. D is the answer. Then we have another question, 22. Don't mind the numbering because the numbering just according to how the numbering was done in the UTME examination questions. Goods withdrawn from the business, that's partnership business now, for private use are credited to what? Is it purchases? Is it drawing? Is it sales? Is it capital? Goods, you are talking about goods. Of course, you should know that it has to do with purchases. The option, the answer is A. Goods withdrawn from the business for private use by any partner are credited to their purchases. That's the answer. Go to question 24. Question 24. This is talking about error. Ada will be mistakenly entered 7,000 naira. 7,000 naira as credit in Abbas account instead of Baba's account. This is what? A. An error of principles, an error of commission, a compensating error, an error of omission. The answer is B. An error of commission. An error of commission. Probably because of, so that was what confused the poster. And he made that error of commission. Instead of crediting it to Baba, whose title it is, or entitlement, it was credited to Abba. We have another question, question 36, relating to partnership business. You say, given these amounts, features, 30,000, debtors, 7,000, stock, 8,000, creditors, 3,000, goodwill, 10,000, determine the capital. Determine the capital. Look at the question critically. Only creditor is different. The other ones are all assets. The other ones are asset, features is an asset, debtors an asset, stock is an asset, then you have goodwill, form of an asset. Then you have the creditors. So all you need to do, sum up the whole assets and minus the creditor. 30,000 plus 7,000, that gives us 7,000, plus 8,000, that gives us 45,000, plus 10,000, that gives us 55,000. Then you minus, deduct your creditors 3,000, 55,000 minus 3,000, that gives us 52,000. So your answer is C. Your answer is C. 52,000. Your answer is C. 52,000.
Who's sending this one?
52,000. Then let's cancel. Okay. 52,000 for answer to question 36. That is option C. And we are looking at question okay, question 38. I'm looking at question 38. But here we have some information given to be used to answer question 38. It says use the information below to answer question 38. You have sales on the credit side, 232,000 naira. You have opening stock on the debit side, 28,000 naira. You have purchases on the credit side, 128,000 naira. You have your carriage inwards, 4,000 naira on the debit side. Carriage outwards, 6,000, 18,000 naira on the credit side, sorry, on the debit side. Then finally the expenses, 20,000 naira on the credit side. Now, the question. Look at the question. You say calculate the expenses debited to the profit and loss account. Calculate the expenses debited to the P&L account. You take us back to the question. Now, can use the question to answer, sorry, the information to answer the question. Okay, that's no more. Take us back to the page before this. Now, look at these two items. Carriage outwards is an expense to the business. Carriage outward is an expense to the business. Then expenses itself, 20,000 naira. Remember, I told us earlier, you don't need all the information in a particular question to answer that question. So, pick out this data, carried outward, 6,000 naira, then expenses 20,000, 6,000 naira. So calculate the expenses debited to the profit and loss account. Your answer is 26,000 naira. D. Option D. 6 plus 20,000 naira. We have another question here. Question 1. Question 1. That's another year question. Another UTME question for another year. It says Kayode, Akbar, and Kachala are in partnership. It's another partnership question. Their respective capital accounts have the following balances: 40,000, 50,000, and 70,000. The partners agree to admit one co as a fourth partner as invest in the partnership capital in exchange for 50,000 naira cash. One co's equity in the resulting partnership. In our earlier class, I told us that another name for capital is owner's equity. So when you see this term, one co's equity, is talking about one co's capital contributed. And you are told here that the partners agree to admit one co as a new partner with 1/5 interest in the partnership capital in exchange for 50,000 naira. That's the answer. For 50,000 naira, B. Option B is the answer. Number 2, which of the following conditions is a partnership dissolved? Which of the following conditions is a partnership dissolved? A. Admission of a new partner. B. Change of the partnership's head office. C. Purchase of a large quantity of fixed assets. Then D. Retirement of manager. who is not a partner? Well, according to the partnership deed, A is the answer. The admission of a new partner. The partnership deed says, in admitting a new partner, the former partnership must be dissolved. So A is the answer. Then number 3, Adama's bank account showed an overdraft of 600 naira on 31st March. On going through the account, it was discovered that the 1,000 accounts. What should be the balance in Adama's accounts? Now take note. Overdraft. It means Adama's account was overdrawn. He wasn't having any balance in that account. So the bank gave her overdraft of 600 naira. So he was owing the bank 600 naira as at 31st March. Meanwhile, Adama has lodged in an amount of 1,080 naira into her account 2 days before the bank claimed they gave her overdraft of 600. Of which, if that money was credited to Adama's account, the overdraft wouldn't have been there. So what you need to do is to do a subtraction. 1,080 naira minus 600 naira. That gives us 480 naira. So it means Adama balance will be 480 naira in credit. That is, her balance will be in credit, not in debit. Because it's the bank that is now owing her, not her owing the bank. She has 1,080 naira with the bank, then 600 naira overdraft was given to her. So you do plus or minus, you have 480 naira credit. Then you have question 4. You say, why are adjustments in the profit and loss account necessary? Why are adjustments necessary in the profit and loss? So the provisions made during the year. No. C. Okay, I'll take that question again. Question 4. Take that question again. Question 4. Let's listen. It says, why are adjustments in the profit and loss account necessary? A, to cover some expenses of the year. No. B, to show the provisions made during the year. No. C, paid and income received during the year. Is still no. Then let's look at option D. Option D says, to ascertain the actual expenses incurred and income earned during the year. Absolutely, that's the answer. The answer is D. Option D is the answer to question 4. Now, we'll go to question 20. Question 20. Okay. Question 20. It says, to ascertain the actual expenses incurred. Question 20. On dissolution, the final distribution of cash to partners is based on what partners be based on. A, will it be based on their partnership agreement? No, not just that. B, capital balances. Their capital will be based on their capital balances. C, will it be based on their goodwill? And D, will it be based on the articles of association? Of course, it will be based on their capital contributed and their balances. Option B is the answer. You will receive what you have given. That is what it means. Your capital and balances. Option B. 22. Profit or loss in a partnership is usually arrived at after deducting from gross profit all expenses. Profit or loss in a partnership is usually arrived at after deducting from gross profit all expenses, including A, partners' salaries, partners' drawings. Partners' drawings. I take it again. Profit including what? What other expenses you need to deduct? After deducting all expenses, including, you must include the capital, the partner interest on capital. You must deduct that because that is an asset to the answer. 24. Question 24. When goodwill is not retained, in the business, the entries in the new partner's books will be to debit what? A, good accounts and credit partners capital accounts. B, cash accounts and credit partners capital account. C, goodwill accounts and credit capital accounts. D, partners capital accounts and credit goodwill accounts. Of course, when goodwill is not retained in the business, the treatment will be that you debit the partners capital accounts and credit goodwill accounts. So option D is the answer. Option D is the answer. Number 30. Look at this question critically. It says Sule and Ahmed are in partnership sharing profits and losses equally. Sharing profit and losses equally. What that means is they don't have deeds of partnership. If Khadija is admitted as a new partner to take 1/5 as her share, what is the new profit or loss sharing? What is the new profit or loss sharing ratio? Sule and Ahmed are in partnership sharing profits and losses equally. If Khadija is admitted as a new partner to take 1/5 as her share, what is the new profit or loss sharing ratio? Now look at the question very well. Khadija was admitted as a new partner to take 1/5. So 1/3, Ahmed 1/3. That is correct because They are sharing profit and losses equally. But Khadija has 1/3. That is 1/3. That makes that option wrong. Then you look at option B, 2/5. Sule, Ahmed 2/5. That's correct to that extent. And Khadija 1/5. That is correct. That is correct. B is correct. Sule 1/5 in C. Ahmed 1/5. And Khadija 3/5. No. Sule 2/5. Ahmed 1/5. And Khadija 2/5. So option B is the correct answer, because Khadija is entitled to 1/5 as her share. The next question will be question 37. 37, yeah. Gradually rounding up this segment of the tutorial tonight, the UTME past question papers and answers. We have 3 more questions to go to round up this segment. So please pay attention, pay more attention. Question 37, still on partnership. The topic is partnership accounts. We are still on partnership accounts, solving some problems in relation to past UTME examination. Question 37, the amount paid by the new partner on admission as a compensation for the reputation built up by old partner is what? Is what? The amount paid by the new partner on admission as a compensation for the reputation built. Mark the word reputation built. Reputation built by old partner is what? A, bonus. B, goodwill. C, premium. C, D, commission. The right answer on that partnership is B, goodwill. 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 The deeds of partnership states that at the point of admitting a new partner into the partnership business, the partnership must ensure that the goodwill that has been built over time should be calculated. And as such, the business can be revalued. So goodwill is the answer. 38. A partnership's internal regulations. A partnership internal regulations are set out by what? A, Constitution. B, a law. C, a deed. D, an article. You'll be able to answer this now. I've been talking about partnership deed, partnership deed. The answer is C, option C, partnership deed. Partnership deed contains the rules and regulations that governs the partnership business. So a deed. C. 39. In the absence of a partnership deed, the Act stipulates that is where there is no written agreement guiding the operation of the partners in the partnership business. What did he say? He said A, an amount should be fixed as salary for partners. That is no. That is not true. B, profits and losses should be shared equally. Profit and losses should be shared equally. Interest on partners' loan should be 25%. That's wrong. Interest should not be allowed on partners' drawing. Interest should not be allowed on partners' drawing. An amount should be fixed as salary for partners. Profits and losses should not be shared equally. Interest should not be allowed on partners' drawing. The answer is D. where there is no deeds of partnership, the Act stipulates that interest should not be allowed on partners' drawing. The other options are wrong. So question 39, the correct answer is answer D. Interest should not be allowed on partners' drawing. Yeah, ladies and gentlemen, with this, we have come to the end of the first segment of our tutorial for today on partnership accounts. The questions are not continuing.
Is it here?
No, it's not there.
No, I don't need it.
Okay.
Don't need it.
But what it is, marker, have you been able to get marker? So we'll be going into another segment of the partnership account, so that we can have more knowledge. We can have more knowledge concerning the subject partnership. Partnership. Don't forget, the subject still remains accounting, or principles of accounts, as it is called in UTME, principles of accounts. By way of introduction and definition, I'd like us to know that partnership can be defined as the relationship which subsists between persons. The relationship which subsists between persons that are carrying on a business in common. They carry out a business in common with a view of profit. Partnerships between persons can be between 2 persons, 3 persons, or more, up to 20 persons. Carry out business in common with a view of making profits. And that is in accordance with Section 1 of Partnership Act 1890. Section 1 of the Partnership Act 1890. Section 1 of the Partnership, the year 1890. 1890. Partnership business can be formed by 2 to 20 persons. So you need a minimum of 2 persons to go into partnership kind of business. And you need a maximum of 20 persons. You must not exceed 20. Otherwise, you are no longer running a partnership business legally. no longer legal. So, to maintain legality, the partners involved in the partnership business must be between minimum 2 persons and maximum 20 persons. We look at another subheading, partnership agreement. Another subheading, partnership agreement. Partnership agreement contains the rules and regulations that governs or control or regulates the activities of the partnership business. And that agreement is what we refer to as partnership deed. Please take note, partnership deed. Just as we saw during the question and answer segment of the UTME past question examination papers. So the partnership deeds is the guiding rules and regulations for the partnership business, and it requires that the partners must sign, they must endorse, append their signature that they have agreed to go into such partnership business. And such appendage, such signature or endorsement by the partners by way of witness, of course, by way of witness. So it is advisable before you go into the partnership business, you have the partnership agreement. You have the partnership agreement, the partnership deeds to regulate the business. It can also be entered into without the partnership deeds. Partnership business may also be entered into without partnership deeds. It means you don't need any formal document or written document to serve as a guide to the partnership business, but it's risky. So to avoid future argument, it is advisable that you have a partnership deed, partnership agreement before the commencement of the partnership business. The subject again is accounting. called Principle of Accounts in UTME, JAMB today is partnership business. Partnership accounts. We have looked at the first segment. Look at the first segment, that is UTME past question papers and answers. We took about 30 questions in all. So answers. And this second segment we are looking at details in partnership accounts. Details in partnership accounts. Details in partnership accounts. And the same partnership, by way of introduction or definition, may be defined as a relationship not just any kind of relationship, it's a business relationship that subsists or exists between among partners. You may call them willing business partners. Two persons, two partners, maximum 20. 2 to 20 with a common business view, and that business we may see it as maximization of profit. Maximization of profits. Yes, that is the major aim of any business. Maximization of profits, among others. So, take note of that. Here we've looked at the partnership agreement as well, talking about the partnership deeds. And this time around, we want to look at some implications where there is no agreement. What is required? Where there is no agreement in partnership. Where or when there is no agreement. Oh, we are friends. Oh, we are neighbors. Oh, we are brothers. Let's just start the business. Let's just start the business. The Partnership Act still regulates such an arrangement or such understanding between two partners or among 3 to 20 partners who intends to go into such partnership business. Section 24 of the Partnership Deed. Section 24 of the Partnership Deed, 1890. 1890 stipulates that when you have this kind of situation, it means profit and losses should be shared equally. You see why it is difficult to venture into it. It means profits and losses should be shared equally. It also states that no interest. The partner can come into the business and withdraw at will without any interest. Definitely the business will die. No interest on additional or excess capital by members. The implications are too heavy for anyone to bear. It also means that all the partners that are working, they will not be entitled to salary or any form of remuneration. And no one will try that. You just be going to work, no salary or remuneration. So that is why at this juncture it is advisable that a partnership must begin with a deed of partnership. Partnership deed. So that the whole parties can be protected in the business. There won't be any arguments in future. Look at the accounting requirements. The accounting requirement for partnership business. Accounting requirements for partnership business. That will include, should be looking at the capital. Capital will be contributed by each partner. Capital to be contributed. Capital to be contributed. Should be looking at interest on drawings. Interest on drawings. So look at interest on capital. Interest on capital. Interest on capital. Continue from here. Number 4. You also look at profits or losses. Of course, sometimes for one reason or the other, the business can go into loss or losses. So the partners too has to share it. Also look at the partners. See? Also look at the partnership. Sometimes they have commissions, they are entitled to commission. Then maybe other remunerations. Other remunerations. Other remunerations. Let me put it here. Number 6. The basis of valuing goodwill on the death or retirement of the partner. The basis. Goodwill. In the event that the partner dies or retires. Requirements for partnership agreements, partnership business include 1. Capital to be contributed by each partner. Number 2, interest on drawing. Number 3, interest on capital. Number 4, division of profits or losses between the partners. Number 5, partnership salary, commissions, and other remunerations. And number 6, the basis of valuing goodwill in the event that a partner dies or retires, or even at the point of admitting a new partner. Admission of a new partner. How do you value the goodwill? A business has been operational for, say, may even be 1 year, and someone is coming in as a new partner. It is essential that you assess the business. What value in form of goodwill has that business gained? Continue. can clean up this. And looking at another sub-heading. Under sub-heading, types of partners. Types of partners. In partnership business, just like some other businesses or organizations or companies, you have their various staffs with their respective roles, functions, job schedules, and all that. The same thing happens with partnership types of business. All the members, all the partners does not play the same role, the same function in the operation of the partnership business. So the first type of partner we'll be looking at is the active partner. The active partner. The active partner. The active partner in partnership business is that partner that takes an active role, active part in the day-to-day operation of the business. It takes an active part. It takes active part in the day-to-day running or operation of the partnership business. Of the partnership business. He or she is always up and doing. Go to get this, go to get that, control this, control that, to ensure that the partnership business does not fail. Because if the partnership business fails, he or she may be liable. There are some questions to answer. So you can see this active partner as the MD CEO of a company, the managing director / chief executive officer. I have worked in a place like this, where the managing director and chief executive officer is actually not the owner of the business. He was employed and put on a payroll. So he is expected to make the business succeed, or else few things may happen. One, he or she may be removed before the end of the tenure. Two, he may be suspended, either temporarily or indefinitely. and in some cases, maybe demotion. In few cases, rare cases, be demotion. So if you are an active partner, you must understand your role in the partnership business. Very important. It's like the chief executive officer. Number two, we look at dormant partner. Dormant, or you refer to him or her as a sleeping partner. Sleeping partner. A way of capital. A way of capital investment. But does not take any active part or role, play any active role in running the business. In running the business. Not take any active part in running the business. So all he or she needs to do is the capital requirement for him as a partner is 100,000, 100K. He contributes his 100,000 naira and go home and rest and relax. Goes home and relax. He goes home and relax. But the difference between this partner, dormant partner, and the first partner we considered, active partner, is that since he is not always, or else he's not always in the office, doesn't take part in running the business. You cannot retire him before the end of the business. Unlike the active partner who take an active part, of course, you'll be entitled to salary. He was actually not given any position as it were before, other than the capital he contributed to not demoted. The third type of partner we consider is nominal partner. Nominal partner. Nominal partner. These partners, we refer to them as influential partners. They are partners in the business because of their, we see them as men and women of substance in the business environment. Men, because of who they are. They are just friends. We call it acronym, that type of partnership, nominal partnership, nominal partner in the partnership business. They may not be from the environment. They may not be from the business environment. The fourth partner, limited partner. Limited partner. A limited partner is that partner whose liability in the partnership business is limited. It's limited to the contribution he has made going into the solution. Because of insolvency or debts, the limited partner may only lose to that extent the amount he or she has contributed into the business. So if he has contributed, say 500,000 naira, he can only lose 500,000 naira. But the other partners, like the active partners, the sleeping partners, they can go as far as selling their personal belongings, property, until the last cover of their indebtedness is paid in relation to the partnership business. As such, since that is what applies to limited partners, please note that this kind of partner or this type of partner is not expected. It's not expected to be part of the management. It's not expected to be a part of the management of the partnership business. Of course, you should know the reason to avoid lackadaisical attitude. I don't care attitude. Whatever happens, I have no much to lose. So it's not expected to be part of the management. Or he or she may not put in his or her best for the success of the business. And explain 4 types of partners in a partnership. Number 3 is the nominal partner. Number 4 is limited partner. We have attempted to identify their various characteristics, the similarities and differences between and among them all. We now look at accounting entries. Accounting entries. No, I'm not. Look at your hand. This is another subheading, accounting entries. In conclusion, of today's tutorial, we look at the accounting entries for partnership accounts. Of course, number 1, it is required that we prepare trading accounts. Trading accounts. Trading accounts to enable us to ascertain their trading activities. We also look at the profits and loss accounts. Profit and loss accounts. We'll also be looking at another account that is relevant is the appropriation accounts. Appropriation accounts. If there are profits, then number 3, they are current accounts. Current accounts. Capital and current accounts. Number 4, of course, the final account. On this note, it is important we know that the sole trader form of business and the partnership business are similar, except that the appropriation account is not relevant to the sole trader business, but every other account are similar. The another point worthy of note is that while some of the partners may contribute capital into the business, some others may not. So it is not mandatory that all the partners must contribute capital into the business, either by way of cash or other assets. Has to be opened for them. And sometimes you may open capital accounts without necessarily opening partners' current accounts. All depends on the information available. So at this juncture, I'd like to bring the tutorial to a close tonight. Thank you for listening. Hope to see you again